Hello and welcome to This Week in Bitcoin, brought to you by Relai Private. We have some exciting news this week and I don't want to waste any of your time. Let's get straight into what happened. You may have seen it, the Bitcoin price dumped by initially 15% since the spot ETFs launched, but now by 10% in the last 10 days. And there are various reasons for this. Reason number one is GBTC, the Grayscale Bitcoin Trust, is having issues with their spot Bitcoin ETF. They are the most expensive ETF out of all of these ETFs, and so far it seems like their gamble is not really paying off. GBTC has always been a problem. They had huge volatility, very lack of trust of their investors. Although they've been the longest running Bitcoin product on Wall Street, there was always this thing in the air where people didn't really seem to trust what Grayscale is doing there. And thus far, it seems to be paying back to them because people are leaving GBTC in record sums. If you've been on Bitcoin Twitter or Bitcoin X, you've seen the post. You've seen how much Bitcoin has been sent to Coinbase by Grayscale or in the other direction, depending on what the inflows and outflows are. How many people are basically saying that they're leaving GBTC and they're going to BlackRock, Fidelity, Bitwise, or any of the other ETFs. And that there's basically a lack of trust within the whole company. And at the end of the day, it's also the most expensive one. So they're really kind of shooting themselves in the foot here. This had a little bit of an impact on the Bitcoin price. We all know it's paper Bitcoin if you buy ETFs, but at the end of the day, these investors will look at the price, it is dumping, and they will act accordingly. They either go in and out. And also a second reason why the Bitcoin price was dumping had a relationship to GBTC, and that is FTX. The insolvency is still going on with FTX. It's actually not even clear if they are going to be going through the insolvency because there's so many red flags there apparently. But one of the issues that they had is that they still had a lot of GBTC shares on their balance sheet, and they had to dump roughly around 60% of their shares. These 60% of shares accumulated to about $1 billion US. And you can imagine if now someone dumps basically $1 billion US in GBTC shares plus the outgoing flows that GBTC already had in their fund, that puts a lot of pressure on that product initially, and then also it puts a lot of pressure on the Bitcoin price itself. For us, that means cheap sats, we can stack sats again, and for others who are in the ETF race, they will definitely rearrange and find their way out of GBTC into another ETF anyway. But the Bitcoin ETFs also had a very positive news this week because they managed to overtake silver ETFs, which are roughly around 5 ETFs in total, to be the second largest ETFs in the commodity space. They do measure this by assets under management, and if you compare silver ETFs to Bitcoin ETFs now, silver has around $11.5 billion US, whereas the Bitcoin ETFs after, let's say, 2.5 weeks already have $28 billion US in them, and basically just taking everything by storm. On the one hand, this is crucially because this is sort of the first commodity Bitcoin is now taking over. Granted, it's silver, but the next big one we obviously are keeping an eye out for is gold, because most of the Bitcoin analysts out there actually claim if we continue the way we've been doing and with all of the benefits Bitcoin has, the scarcity, the possibility to self-custody and all of these things, it's actually very comparable to gold. The biggest advantage obviously is it being digital, so it is digital gold at the end of the day for them. And if you actually go up to the same market cap as gold, the Bitcoin price will definitely spike. And last but not definitely least, we have some positive news for anyone who's involved in the Mt. Gox hack. If you're still waiting for some Bitcoin, there's a high likelihood that you might get some, if not all of it, back in the coming weeks, if not months. The insolvency administrator of that Mt. Gox hacks famously happened over 10 years ago. 850,000 Bitcoin was stolen. He was able to at least secure 142,000 Bitcoin. And a lot of the victims involved in that program have actually set by subreddit posts, by social posts, and also with screenshots of the contact details that people got in touch with them to request payment details. Some of them actually got paid via PayPal, so it wasn't really a redemption in Bitcoin, but apparently that is on the horizon, that people will also be able to send in the Bitcoin address. There's still a debate going on if it's to the same address they used before with Mt. Gox or not, but this is definitely news for some of these victims. People fear that this might dump the Bitcoin price at the end of the day, but who's not seeing it this way is the big bank UBS. That UBS, who basically had to bail out Credit Suisse and kind of, save an old institution. They have been running around proclaiming that even if the Mt. Gox people get their money back, very unlikely that they will sell. Most of them are Bitcoin OGs, and at the end of the day, they're still heavily up in profits. And if they've been hodling for the past 10, 11 years, due to this hack, unfortunately. The upside of actually continuing to hodl is way higher than selling now. So I guess we'll see. Either way, it's a win-win. Victims of the hack get some of their Bitcoin or all of their Bitcoin back. And at the other end, we finally can put this chapter to rest, and the Mt. Gox thing would hopefully finally be over. And with that, we're at the end of the week. If you enjoyed the content thus far, leave us a comment. If you've got feedback, do so as well. And I'll see you next week again to say what happened this week in Bitcoin.